not Sean.
Hi.
Hey guys.
I believe we are live. Soin, can you confirm we are live on
Just a,
YouTube?
just a second.
Looks like it. I see live.
You can see live. All right, fantastic. Look, to begin with, really apologize for the slight glitch. We had a little bit of a technical issue. But look, welcome all, wherever you are from. A very warm welcome. My name is Vijay Mistry. I'm the CEO and founder of Renter Director, author of multiple corporate training programs. Our purpose is to see you leaders achieve standards of excellence in everything you do, and for those holding businesses, to help you scale up your business with ease. Now, today we are going to be talking about something different. We normally talk about leadership or business scalability or retaining employees and all, which we will keep on doing. But today we want to share something about your personal wealth, about you, about how you can really sort of navigate through the stock market more effectively. And I have a very special guest with me today, Sean Tapper. But before give you a little bit of a brief as to why you should listen to Sean. I'll just pass it over to my good friend and my business partner, Soin Shah, who's back in Kenya. I'm in London, United Kingdom. So, Soin, over to you for a few words.
Thank you, Vijay, and a good morning, good afternoon, good evening to everyone out there. Welcome to this live event on one strategy that we have built to build your wealth, right? And as Vijay has talked about and as is about to introduce our guest speaker, I just wanted to share a small disclaimer for today's event. So just before we start, I want to say, want to be completely transparent and share this small disclaimer. Basically, this is not financial advice, but financial educational insights, which will help you to navigate the stock market more efficiently. What we are sharing today is simple strategies and simple tools that our guest speaker has ably engineered. Your risk appetites and ours are completely different, and also past results do not guarantee future results. These are insights we share. We use the Tykr system as one of our conduits to support our decision making and found it absolutely very useful. However, you need to decide for yourself what works for you. Finally, please note we are affiliated with Tykr and do earn a small fee if you do wish to take up the Tykr membership. I'm sure Sean will echo what I have just said and will share an extension to this disclaimer. Thank you very much, and I hope you do enjoy this journey with us. Welcome, Sean. Over to you, Vijay.
Thank you. Okay, so thank you, Soin, and I think the disclaimer is pretty important. I'm sure Sean will be sort of giving his extension or his version as well, if there is one. But here's what I want to really give you a little bit of just a flavor as to who Sean is and why you should be listening to him in the first place. Now, Sean has a software background for the last 15 years, and he's the founder and CEO of Tykr, which is a stock screener. And it's basically an educational platform. He'll be talking about this particular Tykr system, which, I've got a strong belief in this particular system. And he has posted results between 15 and 50% annually since 2016. Although I believe that I've seen results of 85% and 120% annually in a couple of other years. So this, the range is not only 15 to 50%, but I think it goes over 100%, which is absolutely it's a game changer in my opinion. In 2019 he started sharing his tool with retail and institutional investors. So even if there are any institutional investors here, Sean would be happy to speak to you. And he went live in 2020, and it's being used by over 4,000 investors globally. And in fact, I believe I was even checking the Trustpilot rating, which is about 4.8. And I believe that speaks a lot. So I'm not going to take much of your time. You are here to get some insights. Please make some notes. I'll be coming in towards the end, sharing a little bit about my result with the Tykr system as well. So you get a different sort of perspective as to what I've got, what a couple of negatives as well. But I'll give you an overall sort of flavor as to what's been happening. So for now, I'll just pass it over to Sean. Sean will be speaking for about 20-25 minutes. And I encourage you to share any questions, whatever you have. Soin will be taking all the questions, and then we will be passing it over to Sean. So please feel free to ask any question that you want, and we'll be able to take it up. So over to you, Sean.
Well, thanks a lot, Vijay and Sohan. Really appreciate the kind intro there. And for anybody listening in, just to set expectations here, we try to keep investing really approachable, really simple. We don't use complex acronyms and language that you usually find in finance. So we kind of change the game a little bit. But what I want to do, just to give you a little overview, I'll give you a little background, which Vijay did touch on. There's a fun story here and some fun stuff within we can all learn from. And then I'll go over the number one strategy that I use, and I'll give credit to where credit is due. There's a few people I'll share that really were a big inspiration. And then, of course, we'll get into some tips that are really nice for new investors. I'm sure some of you want to start in the stock market on your own, but how do you take that first step? So we'll touch on that as well. So I'll go ahead and share my screen. I've got a deck we can work through. And then, like the guy said, we'll do open Q&A. You have any questions? I can certainly do my best to answer. All right, give me a second. Can you guys see okay?
Not yet, Sean. Not the screen.
How about now?
Let me show it on the screen. How's that?
I'll stop sharing here. Let me do that again. I'll go share.
Okay.
Sorry, everyone. Screen one. Click share. And you should see a slide deck pop up. Vijay or Sohan, do you see that?
Not from your end, actually. Sean, I can show it from my end if you want. I mean, there is something. I've got another icon. Do you want me to do that? I'm surprised why you can't share it. So sorry about this.
Sharing.
We're just trying to get this technical bit sorted out.
Vijay, you will need to enable it on your side.
It's already enabled. I think you can see. Yeah, I can see Sean on the side that he has shared something. Sean, do you want me to bring it up on the screen?
I can send you the deck and you can share it.
Vijay, you just need to click that button to share.
Let me see. How's that?
Yes.
Can you see my screen?
Yeah, perfect.
Absolutely. Go ahead.
Okay. Sorry about that, everyone.
Thanks, Rebecca, for hi. Yeah, I know these things happen. I hope everybody can see the screen now.
I'm typically a Zoom user, so I'm very familiar with that platform. This is a new one. But yeah, let's go ahead and dive in. The key point, like I said, is number one strategy for building wealth in the stock markets. As Sohan did go over, a little disclaimer there. I just want to reiterate in my own words. So if there's any stocks mentioned on this webinar, please don't buy or sell those stocks based on what you hear. Please do your own homework based on your own risk criteria, of course. So as Vijay mentioned, my background is 15 years in software engineering, PM contracting, project management. 2006 to 2010, I had an agency. This was through the recession. It was not an easy business to build. It was actually very difficult because businesses weren't spending money on software and websites and marketing and stuff like that. The thing that I did appreciate about this time period was we got to work with about 400 businesses over 4 years. Now, we didn't do projects for each. There's some consulting projects and stuff that was very quick, but there's some larger projects as well, but allowed me to understand what's a scalable business and what's not. There's a lot of good experience there. At the time, I did not see the value in this, but I'm a very curious person. I love learning how businesses function, how they operate, market, and sell. So I didn't realize this, but it was like a good 10 years later. I'm like, oh, those first 4 years, although I didn't really make any money, they actually paid off well. Now, we did go through a merger in 2010. It wasn't like, hey, we're going to write you a check for $1 million and you're on your way. It was a service business, and service businesses typically don't have a large enterprise value, so they don't sell for much. So we didn't make any money in that transaction, but we did have all debts and liabilities wiped out. That was great. It was like a fresh start. And I knew what kind of business I wanted to create at that time. This was 2010. I'm like, I want to create a SaaS, a software as a service, which is like, think like MailChimp or Zoom or any kind of subscription platform. Problem is, I didn't have an idea at the time, so I started doing contracting for larger businesses. And some of those are below. You can see GE, Kohler, and Kohl's are some of the bigger brands. There's a few others I've worked for as well. And then I've also been in the investing space for a little over 10 years. And we'll touch on the mistake I made first, because that's always a fun story. We'll dive right into what I call, or what can be referred to as, angel investing. There's nothing glamorous about it. Angel investing is investing in private businesses. These are businesses that are not in the stock market. Here's some of the problems with this. You have limited financial data. These are usually small, new businesses. There's usually high competition, and the CEO typically doesn't have experience. I thought, hey, I've got experience in business now. I'm going to invest in that new tech startup at the ground level and watch it go to 1,000x. And again, you walk away with a big payday. That is a lot easier said than done. So I did angel investing on the side in parallel to contracting for about 4 or 5 years or so. And it was a break-even process. Made some money, lost some money, but break-even, it's not very good. And I told myself I could be at this a long time. I got to change things up. I know building wealth through investing is the number one strategy, especially if you want financial independence or to retire early. It is the best strategy for you. So I turned my attention to the stock market. Now, jumping back to the screen here are the differences. So stock investing, you have public financial data. Businesses, by law, they have to show their income statement, their cash flow statement, and balance sheets. These are mature businesses. They've been around a while. They have product market fit. They have a lot of customers. They have momentum. They have lower competition than a brand new startup. And the CEO typically has experience. So I turned my attention to these 4 guys right away. Warren Buffett, Charlie Munger, probably the 2 most popular names you're familiar with. Benjamin Graham was Warren Buffett's teacher and actually co-worker in the earlier days. And then the guy in the lower right, he was a big inspiration to Tykr. And I just want to touch on him for a moment here. His claim to fame is he turned $1,000 into over $1 million in 5 years. The strategy we're talking about today, it really echoes that. So we'll go over the why or how he did that. This is a fun story about Phil. I always love sharing. After serving in the military, he was earning about $5,000 a year, not per month. This was per year as a river rafting guide in Colorado. He did a tour with a few guys that were into finance, and they invited him and say, hey, you want to get into investing? And he's just kind of go with the flow guy. So he's like, sure, why not? So I tried it out, and he never looked back. Something I'd like to share about him as well is he drives a Dodge Ram. And the reason I call that out is in the world we live in, you see on social media a lot of prideful, a lot of braggadocious behavior, especially boys with their Lamborghini or their private jet in the background they rented for 2 hours and stuff like that. And that kind of behavior, I think we can all agree, is a little disgusting. Well, Phil's a regular guy, and I like that. I think he lives in Georgia. He loves the outdoors. He's got a few dogs. I mean, he's not living or desiring to live this keep up with the Joneses type life. And I relate to that. I'm an outdoors guy. I drive a Toyota 4Runner. I love that. I'm mountain biking and fishing and kayaking. That's what I do. And so when I started reading about who he is more than just a financial guy, I'm like, okay, I can relate to this guy. One thing I want to point out on the next screen, he's wrote a few books. There's one more book that's not listed here. He wrote with his daughter. I think it's called Invested. But these two books you should definitely write down, Rule 1 and Payback Time. He talks about in the books how to earn over 15% per year consistently. And I'm not kidding you. I read a lot of information out there, a lot of YouTubing, a lot of books. There's a lot of garbage, but his teachings were definitely sound. Now let's touch on Warren Buffett here. He talks about a higher percentage. So his quote, this is a quote I found online. If I was running 1 million today, or 10 million for that matter, I'd be fully invested. I think I could make 50% a year on 1 million. No, I know I could. So the big question is, when I was researching these guys and their teaching, I'm like, how are they doing this? And I knew they're not using emotions, they're not guessing, they're not gambling. So what does that mean? That definitely means they're using some sort of logic, and I found that logic to be math. So what I did is, thanks to Phil, he provided a lot of calculations in that book that actually worked. Again, there's a lot of stuff out there, a lot of noise you find on sites and probably Reddit or Twitter or wherever that are complete garbage. I've tested a lot of it, does not work. But his about 70% of the math that went into Tykr is really from him. So that's why those two books are really important. Created the first version in 2015 and 16, and allowed me to generate some good results. So I'll show you the returns here in a moment. The problem with this first version, it would take me 5 to 10 minutes to analyze one stock, because I'd have to look at the income statement, cash flow statement, and balance sheet, copy over fields one by one is like over 50 fields to get a result from this tool. And yes, it allowed me to generate some good results, but it was a very time-consuming process. Went a few years, and this came to 2019, as VJ mentioned earlier, and I started talking to some retail investors, just regular people like you and I, as well as institutions, and showed them this Excel sheet and what it can do, the returns it's generating. And everybody was like, hey, when are you going to turn this into a tool to share with others? So you can see here, we launched the first version in 2020. We could call that an MVP, a minimum viable product. And then 2021, we launched a new version. This was last summer. And that's what you see pictured here. And today, like mentioned earlier, we do have over 4,000 customers globally. We are global, so we've got customers in the US and Canada, but we have a lot of customers all over Europe. And then the fastest part of the world, or fastest growing part of the world, is actually South Asia. So a lot of customers joining from India, Indonesia, Malaysia, Singapore, and even we're seeing a lot of customers join from Australia. But what's cool about this is we now have 30,000 stocks on the platform, and they're all taken care of for us automatically. I don't have to do this manual process anymore. So let's touch on the returns here. Just to call out 2016 and 17, you can see that my returns were good. I was very pleased with that. Over 15% is the goal, as Phil was teaching. S&P 500 did beat me in 2017, which is fine. I'm still very happy. But I realized something. The index funds and ETFs I was holding were actually holding me back. And the reason is, these are products that have, like, an index fund, an ETF, and a mutual fund are bundles of hundreds of stocks. And most of them I found were actually overpriced. They're not rated well in Tykr. And I'm like, they're just holding me back. So I cut them loose, I sold them, and I went right into stocks. Now, Warren Buffett, Charlie Munger, even Ben Graham, they talk about holding a very focused portfolio, about 10 to 15, maybe 15 to 20 stocks. I hold 10 stocks. When you log into Tykr, full transparency, you can see the stocks I own and the percentage of allocations. You can literally invest side by side with me, but it's 10 stocks. And it was a little more at this time, but I made 80% to 2018. A call out here is the market went down that year. And we'll touch on this strategy in a
Sorry, we've lost Sean.
Yeah, Sean, you're frozen. Sean?
You hear me?
Yeah, now
Yes.
we can. You just froze for a while.
Okay.
You can pick it up from 2018.
Yeah.
2018. Got it. Okay. So yeah, just to reiterate here, when the market's going down is really when you're probably going to make your biggest returns, or shortly after. So I cut out those ETFs and made really nice returns that year. When the market does well, you're going to do well, but when the market really starts turning around and going south, that's when you really make your biggest returns. And I'll go over that in a moment. But this year, 2020, you probably remember March, we had the COVID dip. It went down 30%. And that's where I made some big returns. Now, again, 2021, another good year. You can see here is pretty close to the S&P 500, but still very pleased. Average returns, if you average these year over year, it's about 50% per year. So I've been very pleased with that. So let's dive in. What is Philtown using? What is that number one strategy? It's called stockpiling. We're going to break that down a little bit. You're buying when everybody's selling. Now, here's the catch: is how do you know what to buy? That's the challenge, because when the market is going down, everyone becomes fearful. Everybody thinks every business, every stock is reacting poorly, or something bad is happening to the business, and that is far from the truth. So what we do is we use Tykr. Tykr can allow you to make, yes, ongoing returns that are great, but where it really shines is buying on sale stocks or buy ratings as those stocks fall. Like, for example, with COVID, I'll list a few stocks I've continued to hold through the years, like stocks like Microsoft, Apple, PayPal. They just nosedived, looked terrible on paper, but COVID was pulling everything down. And what did I do? I just kept buying more. And you can't time the very bottom. There's no software or human that can predict the very bottom. But what you want to do is, it's called buying into the dip. You keep buying as it goes down. So fortunately with Tykr, if those stocks are going down, but they remain on sale in a buy rating, that's a great sign to stockpile. What Tykr also does for us, it's looking at the margin of safety. Ben Graham came up with a concept called the margin of safety probably about 100 years ago. And this is essentially, I'll keep it pretty simple. It's the share price discount off the sticker price or fair value. And a nice example is, let's say a share price is at $100 and the sticker price is 200. That's a 50% discount. What they like, what Ben Graham, Warren Buffett, Charlie Munger, and even Phil Town have taught, try to find stocks that are 50% off. As Warren Buffett phrases, you want to try to buy $10 bills for $5. And what Tykr does is it determines that margin of safety. And if you're interested, we keep all of our calculations open source. So if you want to see the math, we actually have a download section. You can download Excel sheets. You can kind of play with the numbers yourself, but we try to keep this totally open source. There's no black box. There's no secrets here. So it's pretty, when you dive in, you'll see it's not too complex math. We also like to look at, and a lot of this is going to make sense for you guys, are the revenues or the sales increasing year over year? The last 5 years is what we look at. Same thing with EPS, that's the earnings per share, which relates to profit, equity, and then cash. Same thing, are they increasing year over year? We like to see that. So Tykr's looking at all of this. Now, there's a lot of investors out there that call value investing, in some cases it's dead, but the problem is they're only looking at margin of safety. What I found with Phil Town's teachings, and it made perfect sense when I started reading it, is you have to create a lot more rigor. You got to look at more than just that margin of safety. You got to look at the sales, EPS, equity, cash, and there's more. There's like, we like to look at businesses that have lower debts. Like, that's all factored into our calculations. But again, it's a holistic, it's a wider spectrum we look at. It's a lot more rigor. So I want to give you a few fun examples here of great stockpiling events in history. Number one, dot-com bubble. We could go back even further in time, but in 2002, the market went down 23%. In 2003, the market went up 26%. But I did some back testing to see what stocks would have performed really well that year. Check this out. O'Reilly Auto went up 52% in 2003. Starbucks went up 55%, and Foot Locker went up 114%. Let's check out another example, the recession of 2008. Market went down 38% and then went up in 23% in 2009. Didn't get back to that 38%, but pretty close. But check this out. If you would have bought some stocks, some on sale stocks, some buy rating stocks, Microsoft went up 56%, 2009. Netflix went up 73%, and Nvidia went up 106%. So again, this goes back to my returns. When the market is really going down, that's when you make your biggest returns, because you're buying those great businesses as they go down. The third example, COVID, of course, I talked about market. It was a short down and a quick up. It was like March, a little bit of February, and then over the next few months, the market really recovered nicely that summer. So the market went up 16% in 2020. Check this out. Microsoft was 60% that year. Amazon was 73%, and PayPal was 172%. So that's it. That's stockpiling. Thanks to Tykr, we know what to buy as the market goes down. And as we speak, this is still a great stockpiling opportunity because we've had challenges in the market related to inflation keeps going up. So the Fed here in the States is talking about interest rates there to counteract inflation. So you've got that. You've got the conflict between Russia and Ukraine. And then this was going back to November. This has kind of fizzled out, but the latest Omicron variant of COVID caused fear in the market, and that when this fear enters the market, it can be unrelated to the businesses you invest in. But what happens is the market goes down, and investors like us should be smiling, because that's what we want. We want the market to go down so we can capitalize. So I know some of you are probably new to investing. I wanted to touch on this, and then we'll get into some Q&A. So most investors, the biggest challenge they face is buying their first stock. That is definitely consistent. There's nothing wrong with that. This is something new. People can look at investing in the stock market like going to the casino or gambling of some sort, and that's not the case. Also, managing emotions is a big challenge. You have to be able to weather the storms and ride them out. You shouldn't be thinking about always buying and selling and buying and selling. You got to be thinking about, what businesses can I keep buying more? Motley Fool is a podcast I really like and recommend. They always talk about be a net buyer of stocks, which means you should be buying a lot more than you're selling. And the next one is buying when the stocks go down. This is really hard for people, is when the market goes down, to train your mind to be like, this is okay. These are great businesses. Their financials are strong. I'm going to definitely buy more. That's hard for people. So how do you overcome those challenges? Number one, start small, between $100 and $1,000 to buy your first stock or a few stocks. That's perfectly fine. Your goal is not to make money in the beginning. It's to just increase your confidence. That's it. The other thing to keep in mind is you're investing in businesses. People look at stocks like they do crypto or, again, gambling. It's completely different, because stocks are businesses. They sell products and services, and they're not going to wake up one day and all the employees are going to be like, you know what? We don't want to run this business anymore. We're just going to shut it down. It doesn't work that way. Businesses are always consistently buying and selling products, no matter who's the president or if there's some kind of Omicron or COVID variant or something going on. These businesses aren't going to say, you know what? We're going to stop. That it doesn't work that way. They're going to continue moving forward. Businesses have momentum, and they've got customers, and they've got to continue serving those customers. So fortunately, investing in businesses is actually pretty safe. And then the last thing is find stocks with good financials. And fortunately, again, Tykr does that for us. So I want to show this screen here real quick. Tykr is, anybody can join for 14-day free trial. We are offering a 30% off. Sohan will share a link to everybody if you're interested. The code in the lower right you can see is just save 30, and that's after the 14 days expires. Cool. That's all I got.
Thanks, Sean. That was pretty insightful. I hope everybody saw some value. And please do post your questions, although I have a couple of questions. I think I've got about 2 or 3 questions lined up for Sean already. First and foremost, Sean, if somebody uses this code, how long is it valid for? I mean, is it like,
It's valid for life. It's not like 1 month or 1 year. It's like if you enter it now, you're going to get 30% off for life.
yeah, but for those who sign up, can they sign up within a month? I mean, how long is the code valid for?
We usually do a 1 month window, so you got the
Okay,
next month to use it.
got it, got it. All right,
Mhm.
fantastic. Now, Sean, I know you spoke about margin of safety,
Mhm.
and you have some stocks where the margin of safety is lower than 50%, and in I think one instant it was 1%, and obviously the stock is overweight,
Mhm.
but obviously you hold that particular stock. Could you just enlighten everybody as to
Sure.
why you do that?
Yeah, most of my portfolio are green. They have great financials. They have high margin of safety, greater than 50%. But as VJ said, there is one stock I hold that is less than 50%. That stock is Atlassian, it's team. Now, what Tykr teaches, and this is one thing that Phil Town teaches, even Warren Buffett, is you don't just want to look at the numbers. This is where a lot of people on Reddit and Quora and Twitter make the mistake, is they'll look at numbers and only numbers, and they make their decisions there. You got to realize that business is more than just numbers. So that's why Phil calls it the 4 M's. And we actually walk people through that in our tool. So the margin of safety, meaning, moat, and management. Margin of safety is the math part of investing. Tykr does that all for us automatically, which is great. The other three are pretty fun and they're pretty easy after you get a little experience. So the meaning is the type of business model and will it be around in the next 10 years? So I like to or ask people the question, what kind of industries have you worked in? What kind of interests do you have? That's going to be a lot easier to figure out if it's going to be around in the next 10 years. Like for example, my background is primarily tech. So I know tech stocks, I would say very well, but pharmaceutical, I'm not the expert. I don't touch them. So try to avoid them. Then there's the moat. That's the competitive advantage. You want businesses at a relatively low competition. And then the management, that's the CEO. You like to find CEOs that have a lot of great business experience. If it's the founder and it's a business that's been around a while, that's a great sign. They've been leading the business and growing it. There's also a lot of publicly traded companies that a new CEO comes in to run the business. You got to think about, what have they done before? So it's kind of like, I like to use the American football analogy. Let's say you're a GM of a football team, you need a new quarterback, or you're going to go to the local high school. You're going to go find a quarterback out there that's won championships. Pretty obvious. You want somebody that's got a winning track record. So those are the 4 M's.
Okay. Sean, I think Rebecca has asked a question. What is the price after 30 days, please? So maybe if you can just
Yep.
clarify the price before I ask you a couple of other questions.
Sure. So our most popular plan, we've got basic and pro. Basic is 19 a month, and then pro is 29 a month. Now, if you were to trigger that to a yearly option, you get 40% off. You can stack the 30% on top of that. So a lot of people like to go with an annual option anyway.
Thanks, Sean. And by the way, Rebecca, that is dollars, US dollars. I know
Yes.
we in the UK we use sterling pound, so that is going to be US dollars. So I hope that clarifies that particular point. So, Sean, my question is again going into the 4 M's. What are you planning to do as far as Tykr is concerned in the next 6 months, 12 months? I mean, are you going to have it more easier for people to pick up these 4 M's as well at some point, or what's the roadmap looking like?
Yeah, great question. So with the 4 M's, and I'll finish my point. You just get a great reminder on team. We'll go back to team. They do not pass the first M, which is okay. I know a lot about tech. Team is Atlassian. They have a huge suite of products, including Jira, Trello, project management tools. And most large companies I've worked for, they use this tool, and they're not like getting one license for one employee. They can get hundreds, and that adds up. I mean, it can be tens of thousands up to hundreds of thousands of dollars per year for a large organization. And every large organization today has an IT team. So, and Atlassian seems to be a favorite. So, although their financials aren't great, the meaning checks out. The moat, there's other PM tools hitting the market. Monday.com is becoming more popular, and there's a few others like Asana. But still, I'd say Atlassian's still the crowd favorites. Management, they have a really awesome culture. They treat their people great. They're based out of Australia, very big on work-life balance. Like if you want to retain people, treat them right. Like they're not overworking them. So I think they got a good culture. So of the 4Ms, 3 pass. The first one does not. But to answer your question here with our future, we have a 4M tool built into our tool now that kind of walks you through. But what we've been doing the last 6+ months is really listening to our customers and asking them questions like, hey, what do you want added to the tool? What can we do better? We also try to think about ways to make their experience a little easier. So we'll be using crowdsourced data, meaning if you get to a point in the 4Ms, you don't know who the competition is, don't worry about it. There's already people. It's showing what other people have already selected as other competitors. So you can quickly work through a 4M to understand, like, obviously the financials, that's got to check out. What does the meaning look like? What are the other people saying if it's going to be around? What are the competitors, and what is the experience of the managers? So if you really want to have some fun with this tool, you can see what other people are doing and work your way through it. So it's going to be significantly better.
Okay, thanks, Sean. I still have another question, follow-up
Sure.
question.
Mhm.
So tell me, you sold Visa at a certain point.
Mhm.
What was the reason? And number two, how often are you planning to reappraise your portfolio? Because obviously,
Sure.
I mean, the results are pretty good, but obviously, for the interest of everybody listening, I mean, how do you really plan to appraise? And
Sure.
why did you sell Visa at a certain point?
Sure.
I mean, what were the reasons?
So yeah, I sold Visa in December of 2020, or 21. And what I do is I sell, because my portfolio is very focused, I don't sell too many stocks every year. It's usually buying and using Tykr to know when to buy, those moments when the market's dropping. But Visa produced, I think, 2% for me in returns in 2021, whereas my entire portfolio, as you saw, was about 28%. So I look at Visa like I do MasterCard. They're just a straight up credit card, which is nice. But I look at a company like PayPal has a lot more diversity with payments. They've got buy now, pay later, which is picking up. They're into crypto, which is a game changer. They serve consumers and businesses. They own Venmo, and Amazon just secured a partnership so consumers can pay with Venmo. And then PayPal they're looking at adding stock trading to their platform. They're already in 200 plus countries and territories. If you had stock trading, they could be the best of the best in the world. So I look at all that, like a PayPal versus Visa. I'm like, Visa is very limited. That business model, that meaning, very, very like limited business model to generate compounding returns. And then I look at the moat and I'm like, you know what? You look at MasterCard, Discover, American Express. There's nothing here that's really changing the game. Go back 20 years, sure. But I'm like, you know what? All these boxes are not checking for me. I'm cutting this on out. And I had to make the decision, though. What am I going to buy? So, and I can quickly answer that. I was looking at Tesla, Google, and Adobe. I ultimately went with Google because it has more revenue streams within. And just the way it's going over the next 10 years, I definitely see much more compounding returns out of that stock than Tesla. Tesla, the risk there is other EV companies. I had to avoid that. And Adobe is still very good, but when you stack it next to Google, there's more revenue streams within Google. So they're the winner.
Super stuff. I've got my good friend and my neighbor Amit, who's asking, is Tykr an analytical tool only, or can you also directly trade on the stock market?
Great question.
Yeah.
So Tykr is classified as a screener and educational platform. It's not a broker. So you still have to.
Oops. I think Sean's frozen. Soin? Has Sean frozen?
Yeah.
Yeah. Yes, I think Sean's frozen. But Amit, to answer your question, yes, just like what Sean has mentioned, that it is basically it gives you some insights for you to make that particular decision. For me, I use stockbrokers up here. We got interactive
Mhm.
brokers, and we got Hargreaves, and we got all these other stockbrokers where you can really buy and sell shares. So that's what I do. I use regulated ones here in the United Kingdom, who are obviously regulated, so that our money is secured. So that is what I basically do. So Tykr will give you the indicators, and this is actually long term. So it's not short term trading, or it's not for short-term traders, and I think Sean will correct me if I'm wrong, but that is what the whole intention is as far as Tykr is concerned. It's for the long term. Sean, is there anything else you want to add to that? Sean?
You're absolutely right. Yep.
Okay,
Can you
great.
hear me?
Yeah, I can hear
Yes.
you, but there is a background noise of some sort.
Okay.
Couldn't really make out what it was, but yeah, I can hear you. So yes. So Amit, I hope. Yeah, okay, holding long positions. That's what I do as well. And I just want to
Yep.
share. If you use Tykr, I want to share some results which I've got. Now, timing is very important. So,
Mhm.
my results could be off chart. They are nowhere near what Sean's results are. But these are just some indicators from a demo account and from a live account as well, which I have. So I'll just share some results. Uh, and by the way, I hold American stocks. I don't hold UK stocks for the reasons that I don't have much faith in the FTSE 100. I like the American stock. So the ones which I'm holding is AMD, which is about 14.37%. Apple, I got about 31%. I've got Microsoft, which has made about 10.97. FTNT, and thank you, Sean, that was a good one.
Hmm.
45.49%. I also
Mhm.
hold Tesla. I know Sean doesn't hold Tesla, but that has made me a whooping 70.4%. Paylocity is 4.5%. Now the negatives as well. PayPal, it's down 61%. And what Sean has spoken about stockpiling itself, this could be a great opportunity for the future, so long as all the matrix and everything work, and so long as all the criteria which Sean spoke about are being met. Google, I was down by 3.71%. I suppose, like I said, it's all to do with the timing.
Mhm.
I might have bought it in June last year or when it was
Mhm.
high. Square was down 44.36%. Palantir is down 50%, but I think that's a great opportunity for anybody
Mhm.
to really take advantage. I mean, this is just my opinion, please. I mean, you have to do your own due diligence.
Mhm.
And I also hold NVIDIA, which is about break even at this particular point, but I have a lot of, I've done my research as well. So I just wanted to share a little bit of a flavor as to why Tykr has really been useful. And yes, that's what I wanted to say. Sean, any last words? I think we have done with all the questions. Anything else you want to add?
I'd say, going back to the presentation, the hardest step is always getting started, and just start small and start reading some of the content, start using the tool a little bit. It'll guide you along the way.
Great. And Sean, if anybody wants to reach you, they can obviously just go on
Mhm.
Tykr.com. I think, Soin, you'll be sharing a LinkedIn link of Sean as well. If anybody wants to link with Sean
Mhm.
on LinkedIn, is that all right, Sean? If they want
That's
to,
yeah.
if they have any
Please.
questions or anything, you can just connect with him on LinkedIn, and obviously just shoot out any questions you have, and I'm sure Sean will be happy to have a dialogue or clarify anything that you want. So we could do that. Soin, anything else you want to add towards the end?
I think I must appreciate Sean for joining us and sharing his phenomenal journey. It's definitely inspiring, and actually, I'm going to be sharing more and more of this to a number of colleagues whom we're working with, and definitely they would be really interested because we've been having conversations not only about stocks, but I know it's something that. Uh, Sean just said that he would not want to get into, but the younger generation are really into this thing called crypto, and it's catching fire out there. But yeah, I mean, it's I guess I can say some people made their money, and some people are at this stage it's not doing so well. But uh, I think I kind of agree with you, Sean, that the long-term strategy is to work with companies that you know and you understand the underlying principles, and the terms that you used are what it is, the modes and the uh, the the EPS, and what's the underlying exactly. I mean, how those companies are growing, and what's their long-term view, and what are the revenue streams looking like. I mean, these insights are actually really important when people are putting their money in investing in this kind of stuff. So I think that's my two bits, and much appreciated, John. We really, I'm sure the audience have enjoyed this great webinar. Already, Amit is also saying great webinar. Thanks. So I guess our comments are being echoed. So we look forward to doing more and more of this with you, and as we see more tweaks in your on Tykr, it'll be great. Asante sana, and that's what we say in Kiswahili. Thank you very much.
Thanks, Soin. Yes, yes. And
Thank you.
yes, Rebecca has also said, thanks, great webinar. Thanks, Rebecca. I'm glad you found this useful. Again, thank you very much, Sean. I mean, this has been a real pleasure, and I can't thank you enough. I really love Tykr myself, and I'm hoping to see Tykr move to the next level. So, yeah, thank you again for taking your time to explain about Tykr. And like I mentioned, if anybody has any questions or anybody wants to link up with Sean, Soin will be sharing his LinkedIn link, and you're most welcome to ask him any questions. Thank you very much, Sean. And we look forward to the next live event, which will take place perhaps next week. Thank you very much, everybody. Bye for now.
Bye.
See ya.